So as Maria Felicia was saying in the introduction, the title of my presentation is Indicators of Fraud, a preliminary taxonomy. And this is the first puzzle, the first piece of the puzzle on which we are working in trying to identify which can be some tools and instruments that can help identifying and preventing fraud. So just to give a brief introduction about the context on which we are working, basically fraud involves each deliberate deceit that companies or organizations in general perceive with the interest to secure an unfair or unlawful gain. This includes a variety of false representations, concealment of material facts, and deceptive practices. So basically, one of the main relevant and also simplest way of identifying a fraud is when a company submits falsified financial statements to have access to a bank loan, and doing this, it misrepresents the financial health and ability to repay this loan. What is the importance of identifying fraud indicators? Of course, in the complex landscape of the different varieties of behaviors, of bad behaviors that can lead to a fraud, the possibility of identifying a set of indicators is crucial to prevent financial losses and, of course, maintain organizational integrity. This is for what pertains the internal reputation and stability of the organization. But which are the main principles of fraud prevention? So basically, of course, the deterrent. So the main principle should be to discourage all the fraudulent activities that can lead to fraudulent behaviors and to of course, the perceive of unlawful gain. The detection, so as Dr. Tuccillo was saying before, preventing a fraud is one of the main important outcomes that a model, a taxonomy of indicators can give. Of course, investigating to uncover frauds, and also as the main outcome to give sanctions and penalties to prevent future occurrences. What should be the approach to fraud risk? Of course, the assessment and self-evaluation of fraud risks. So conducting thorough fraud risk assessments to identify vulnerabilities. This should be done by, hopefully, by each organization. This actually today is made mainly by the financial institutions. So, of course, to prevent a variety of different financial or organizational frauds in general. And of course, to promote the institution of a proactive and structured fraud risk management. Each organization in an ideal situation should be able to implement a structured and proactive approach to manage and mitigate fraud risk. What does fraud prevention and the possibility of identifying a set of fraud indicator means in the context of EU funds? In the context of EU funds, all that bad behaviors that we have seen to slide before are aimed to deceit to improperly obtain or use funds allocated by European Union, of course, for a variety of different projects and initiatives. So we all know that the European Union just has a variety of different measures and of different funds that can be accessed by companies and organizations in general. And so building on these, we are working on the importance of identified fraud indicators, so on the importance of indicating a set of objective and qualitative and quantitative measures that can be applied, of course, by considering the different peculiarities of the organizations that are object of this analysis, but that can give the possibility of analyzing and preventing possible bad behaviors or misrepresentations in the financial documents, and that can, of course, also help all the institutions to prevent the frauds. So what is the objective of the presenting taxonomy? First of all, raising the awareness. So fraud can be also related to a cultural process, so to a cultural tendency of committing bad behaviors or misrepresentations. Provide the tools, so equip all the stakeholders that are involved in the prevention and detection of frauds with tools and techniques that can help to detect and prevent frauds. Of course, promote transparency, and this objective, this goal, is strictly related to the effort that we are making of trying to provide a taxonomy that can be as objective and general as possible, but still keeping in mind the different peculiarities of the organizations that are involved. So this is also related to the transparency and accountability in using of EU funds. And of course, enhancing the monitoring, so improve all the monitoring mechanisms that can be put in action to address and prevent, of course, potential frauds. Which are the common types of fraud on EU funds? So just to give a very, very general representation of the main kinds and types of frauds. Of course, the misappropriation of funds, so the unauthorized use of funds, of the bad use of funds that can be related to purposes that are different from the one that have been approved. The falsification of documents, so the altering or forging documents that can lead to the mislead of auditors or officials. The presence of conflict of interest, so those undisclosed relationships or interests that may have an influence on decision making, and that, of course, are not disclosed in the process of submitting the application. The double funding, so the claiming of the funds that can be derived from multiple sources, but that are directed basically to the same project or to the same expense. The obtaining of funds that are related to non-existent services or goods. So the possibility that organization may report fake services or fake goods to claim funds. And the overstatement of the cost, so the inflation of costs or expenses that, of course, are aimed to receive higher reimbursements or higher funds. All these misbehaviors and frauds, of course, have a high impact on the EU funds. So first of all, they can lead to financial losses. So basically, they can lead to the financing of activities that are not related to the objectives of the measures or of the funds to which the EU funds or EU projects were aimed to. The reputation damage, so this is related to the erosion of trust in institutions that distribute EU funds. So this is a general negative impact that these frauds might have. And then we have two more specific and vertical consequences that may lead to legal actions against all the individuals and entities and organizations that are involved in fraudulent activities. And of course, the operational disruption. So basically, the destruction of funds from positive, let me say, projects, and on the same way, the delays and disruptions in the implementation of genuine projects. So this proposed taxonomy is also as it backgrounds the mapping of the key stakeholders that may be interested in adopting this taxonomy, and also, of course, in preventing frauds. First of all, of course, all the EU institutions, so the European Commission, the OLAF, and the Court of Auditors in general. So all these institutions that are involved in the distribution of the funds on one side, and also in the control of possible fraudulent behaviors on the other. All the national authorities that in some cases act as a filter between the European Commission and the beneficiaries, so the agencies, the financial regulators, and the law enforcement bodies. All the beneficiaries And in this category, we of course put all the organizations and individuals that receive EU funds, or that maybe cannot receive EU funds because the funds have been assigned to companies or to organizations that instead are adopting misleading or fraudulent behaviors. And of course, all the other auditors and inspectors, all the independent bodies that conduct audits and inspections to ensure compliance. So, starting from this background, I will now propose what is this preliminary taxonomy of fraud indicators that we have developed during this year of working on the FRECCIU project. I just have to do some premises. So first of all, the background of this proposed taxonomy builds on, of course, all the legal and reports that come from the European Union and all the agencies and commissions that are working on fraud prevention. And this was also the case of the mapping that we have just seen in the previous slides. And also it also builds on a variety of different documents that have been developed by some international and national accountability organizations. And that can, of course, give everyone the right basis on which to build this taxonomy. In the following slide, we will see a first part that is descriptive. So the first part is mainly set to give an analysis and a description, and that is mostly qualitative, about which are the main funds, EU funds, that can be object of the analysis. So the first part of the taxonomy is aimed of mapping from a descriptive point which are the funds that could be analyzed through this set of indicators. And also, in the first part, we are just trying to map from a descriptive way which are the companies, so which are the main descriptive characteristics that characterize the companies that will be object of this evaluation of these indicators. In the second part, we developed a set of quantitative indicators that is also based as a logic, as a rationale, on what Dr. Tuccillo was saying before, so the alert system, so trying to develop a set of indicators, of quantitative indicators that builds on the financial statement in general, and that can, of course, be used as a predictive instrument to detect frauds. So for what concerns the first part of description, this set of indicators just provides a set of questions, a set of values that should be valorized related to the type of funds. So in this first part, we are just mapping the different types of funds that might include the grants, the subsidies, the loans, so all the different measures and all the different kinds of funds that organizations can have access to when applying for funds related to the European Union. The second is the measurement, so the assessment of the scope and impact of each fund. The third is related to the amount, so the evaluation of the financial magnitude of the funds obtained, so how much of the funds have been obtained. And then we have the temporal extension, so the time span over which the funds are utilized. So we all know that EU funds, according to the different measures, have different time horizons. So in this first part, we are just mapping the time, the amount, the extension, and the kind of reimbursement. So if it is a grant, if it is a lump sum fund, so the division between the different kinds of mechanisms that are relating to the different funds. The aim of this first descriptive part is to set the descriptive elements of the funds to preliminarily assess the potential future fraud. So in this case, we are just linking and put order, let me say, in the different, in the wide landscape of EU funds to set a descriptive analysis of which can be the funds, which are the amount, which is the amount of money that has been benefited from an organization, and which is the kind, grant, lump sum, loan, or different kinds of alternatives that the UF fund gives to the organization. Then the second part of this taxonomy is related to the description of the beneficiary company. Here again, we can have a different kind of funds. The type of fund that has been awarded to the company, the amount, here again, the extension, and the kind. So starting from this, we start to map the legal form of the beneficiary. So we start to set if the company that has benefited from the funds is a limited liability company, which are the shareholders, which is the shareholder composition, where is the legal headquarters located, which is the country of residence of the legal representative, if we have an association, if we have consortia, if we have temporary association, if the company has a track record. So if, for example, the organization has successfully completed 5 government funding projects over the past decade, which is the company age, which are the ongoing procedures, and which are the pre-existing banking relationships. So in this second set of qualitative points, we are just mapping which are first of all, the companies that mainly have access to the funds. And secondly, we are just trying to detect the preliminary indicators that may be seen as a preliminary alert. So first of all, shareholder composition. How many shareholders, how many people are within the company if we are talking about, for example, a limited liability company? Do we have one shareholder? Do we have more shareholders? Where is located the headquarters? So do we have an idea of which can be the main differences, for example, between the legal headquarters and the operational headquarters, if any? Then the country of residence of the legal representative. So does it coincide with the legal headquarters, or we have some differences in it? And then another point that can be useful, the company age. Is this company that we are analyzing a newborn company? And this newborn company is maybe born very, very close to the application of to the EU funds, or this company is an old, let me say, company that has, for example, a track record, so that has previous projects funded and approved in the landscape of EU funds. So lastly, we have ongoing procedures. This refers to the legal procedures, to possible legal procedures to which the company may undergo or may have been undergone in the past. And if we have an analysis of the pre-existing banking relationships in a positive or negative way. So if this company, this organization that we are analyzing has access to the credit, if it is perceived as a solid company, if it is perceived as solid from a financial point of view, if it's able to repay the loans, or on the other side, if it is perceived as a risky company for what concerns its ability to repay the loans, the grants, and the money in general. So after this part that again is conceived as giving a descriptive representation of the funds and of the company, we have identified a series of balance sheet derived indicators. The reason here is that, first of all, balance sheet has already a set of positive elements that can be used in developing a set of indicators. So usually we have an homogeneity in doing the balance sheets. And also we have the possibility of comparing the balance sheet for one company and for more companies, for different companies in time and space. So the positive elements of analyzing and deriving indicators from the balance sheet lies in this. And in the indicators that we are seeing here, we also have tried to eliminate the possible misinformation or the possible accounting operations that may lead to imprecise representation of information in the balance sheet. So in this balance sheet derived indicators, we just respected the traditional taxonomy that distinguished between the indicators related to the levels of capitalization. So to everything that is connected to assets and equity. So all the things that are related and directly derivable from the balance sheet. Then we have, so this is the first area of interest. Then we have analyzed the second area of interest, that is the financial stability and financial health of a company. And then lastly, we have developed a set of indicators that is related to the economic side, economic performance of the company. So starting from the indicators that are derived from the balance sheet, the first of all is the level of capitalization. So as an example, a company that shows a high equity to asset ratio indicates strong capitalization and lower financial risk. This is a very general principium that is related to the level of capitalization. The second indicator is the debt level and anomalous equity changes. So in this case, we are analyzing, first of all, the overall level of the debt. So the ability of the company of maintaining its activity by considering first the level of capitalization and then the overall level of the debt. In this case, we are also analyzing qualitatively what is the level, what is the composition of the debt. Related to the analysis of the debt level, we have the analysis of anomalous equity changes. So in this case, we are analyzing if equity has sudden and anomalous changes in the period that is analyzed. Then we have the equity to asset ratios. This is basically related to analyzing what is the strength of the equity in covering the assets. So what is the structure, the overall structure of all the immobilized assets in respect to the equity. Then we have the composition of fixed assets. So in this case, we are analyzing according to the taxonomy that we see before, to the descriptive set of indicators that we saw before. If, for example, the company has immaterial assets or financial assets that change over the time period that is indicated. And then we have, of course, the capitalized costs. This indicator is particularly relevant for some kinds of funds, especially for those who intend to provide funds for example, for the buying or for the financing of specific assets. These indicators, as well as the next that we will see, are supposed to be calculated over a time span of at least 3 years and over a time span that covers the EU funds. I said at least 3 years because, as we saw before, EU funds have different time horizons. So we are setting this taxonomy on a time horizon that goes from 3 to 5 years at least, according to the year in which the company has received funds. So these time periods, of course, will change according to the different kind of funds that we have mapped in the previous description. The second set of indicators are aimed to analyze which is the financial balance, the overall financial balance of a company. In this case, we have built on the reports of different accounting institutions, national and international institutions, that have already underlined the importance of specific indicators for preventing financial frauds. And since EU funds are, for some cases, and especially for what concerns the financial balance, relatable to the financial frauds, we extracted, for example, the net financial position. The net financial position is aimed at analyzing which is the overall debt situation of a company. And in this case, it can be calculated on a short-term perspective, on a long-term perspective, and on a total perspective. Of course, we will keep the three of these. So the short-term net financial position, the long-term net financial position, and the total. Here again, over a time span of 3 to 5 years at least. And this, of course, is aimed of identifying which financial assets and which financial debts are related to a specific company. Then we will analyze the current asset composition, so which is basically the current composition of positive and negative elements of the balance sheet. This is aimed at calculating which is the capability of the company to repay the current activities. Then we have the stock rotation index. This is aimed at analyzing if there are some inconsistencies over the time span considered, sorry, in the way in which the stocks are accounted in the balance sheet, or if we have sudden and unexpected changes in the way in which stocks are accounted. And then we have the receivable deterioration indices. So here we have a specific sets of indices that I have not reported for synthesis here in this presentation, but that are widely accepted in the practice and also validated by the theory. This is aimed to analyzing which is the liquidity of the company. So as far as we pass from the current activities to the liquidity, we are able to understand if a company is liquid, if it's able to repay its current debts with the liquidity, okay, with the acid ratio, just to make an example. Lastly, we have the analysis of the current debt composition. Here again, this analysis is aimed to find if there have been some sudden or unexpected changes in the way in which the current debt is composed. Lastly, but not less important, we have the economic indicators. Here we start from the very, very classical profitability analysis from the return on sales, return on investment, and return on equity. So just to have an overall idea of what is the profitability divided from these three indicators. So, sorry, the sales, the total operational profitability, and the equity profitability. Here again, over a time span of 3 to 5 years. And this is aimed to verify if we have some alert indicators. So if we have, here again, sudden changes in what is the operational or equity profitability of the company in a positive or in a negative way. Then we analyze the levels of the EBITDA. So we basically put off the EBIT. We consider, sorry, in the EBIT also that also the depreciation and amortization impacts. Here again, this analysis is aimed at analyzing if we have sudden changes. We also put in this set of indicators the analysis of the added value. So to this analysis is aimed to verify if we have inconsistencies in the so-called internal or external operational costs. And this is, of course, the analysis of the added value and the difference between the EBIT and the added value. We also put the analysis of the so-called non-monetary economic items to analyze if we have sudden changes. This analysis is, of course, related to the analysis of the assets that we performed in the balance sheet analysis and to the analysis of the capitalized costs. And here again, we also put an emphasis on the analysis of the extraordinary items. This is, of course, aimed at identifying if the company had changes sudden and unexpected. In this case, as you can see in the slide, for example, a company that reports substantial gains from the sale of a non-core asset, this may affect its ROI. So from the analysis of the ROI, we might have an idea of which is the overall industrial performance in terms of profitability. But with the analysis of the extraordinary items, we might see how much of the operational profitability derives from the core assets and how much of the profitability derives from the non-core or extraordinary activities. So we also...
Sorry to burgeon, Francesca.
It's over?
I mean, yes, if you, I mean, keep your time, of course, but I mean, 30 minutes are already.
Okay, sorry.
Okay,
so
no,
thank you. I will just say what are the next steps. So, of course, we are working on this preliminary taxonomy, as the title of my presentation says. So we are working on it. We are working on the validation of the indicators. We are working on the application of these indicators to samples. And we are working, and the next presentations will be useful in this case, to the meaning and to the use of these indicators in terms of predicting future frauds. So thank you for your attention.